Professor. So the first question is, what is the investment framework and investment style followed by UTI Core Equity Fund?
Yeah, thanks Kunjan for the question. Hello everybody. If you look at the UTI Core Equity Fund, we follow what we call a relative value strategy, wherein we typically tend to look at decent quality stocks which pass a certain threshold as per our system and trading at the lower end of the valuation, either on a 3-year or 5-year or a slightly longer time frame as well, as the case may be. The valuation could be any of the metrics, either it could be price to earning, it could be price to book or EV to EBITDA, or in some cases even the net asset value, depending on the sectors that they operate in. The second part of the strategy involves looking at cyclical stocks which are typically trading at the lower end of the cycle, the business cycle that they operate in, because we believe that market at times tends to ignore the long-term potential of a cyclical stocks trading at the lower end. Hence, there could be very good opportunities for value-based investors like us. And lastly, we also look at mid and small cap stocks, which are not probably very well covered on the market front, but could be available at reasonable valuations. And thanks to our in-house research, we are able to identify such stocks based on the strength of our research, especially the small caps research, which we have built up over a period of time. So these are the three cornerstones of our strategy that we focus on as far as a UTI core equity fund is concerned.
What is the relative value investing and how it is different from deep value and pure value strategy?
Now, coming to the definition of what is a deep value investing, it simply involves buying cheap. Either you buy it at mid single digit price to earning or below book, or maybe at a 7 or 8% dividend yield, all of which looks very cheap to any investor studying the financials. However, one needs to remember that in today's market, it is an extremely efficient market, and if some large cap stock or the top 200 stocks are trading cheap at say 7-8% dividend yield, less than price to book, or less than 5-6 times earnings, it probably implies that a lot of investors have studied it and given it a miss. If you look at the trend 20-30 years back, such strategies worked well, primarily because there was a huge amount of information arbitrage which was available, but today that no longer exists. Hence, if any stock is quoted cheap, there must be a very valid reason for quoting cheap. Coming to relative value investing, it's a slightly modified version of this, where we typically tend to look at a better quality stocks, which are kind of trading at the lower end of their valuations. However, having regards to the term value, we also do a sanity check in ensuring that we don't have a very high PE stocks in the portfolio.
What are the levers you look in a business before adding exposure? And how do we decide the position size in the portfolio?
I think the first and foremost is the quality part, which is more from a UTI perspective. I think the company needs to be of a certain quality before it fits into the universe. However, we are willing to go a little bit down the quality curve in terms of, say, buying a company which may be earning only 7-8% ROC, but there has to be a very high level of conviction that this ROC can move towards a 14-15%, book cash flows can improve significantly so that the re-rating can happen. So we have a very high filter as far as quality is concerned. And obviously the second part is the governance, the corporate governance, where again, as a fund house, we have a very, very strong preference for good governed companies, and any company is not meeting the threshold is not included as part of the universe. As far as position sizing is concerned, there is a large kind of a correlation with a benchmark. Based on the benchmark weights, we take plus or minus, and we tend to ensure that we take active weights across the portfolio. And when you look at the average active weights, it's also kind of pretty high. We don't believe in taking underweights across the portfolio, so most of our weights are actually active weights. Thank you everyone for listening.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.